The purpose of the Global CFO Council is to provide an educational and networking forum for senior financial executives in order to share best practices, discuss current financial issues, and to learn about current topics related to the performance of their jobs.
So I don't read your bios. They're really cool. Thank you for sending them. I find stuff on the internet about you. And Kevin, I didn't find much. You're like a ghost. Okay, I don't know if you shut down all your social media when Bob gave you the heads up. Luckily, Jimmy didn't, so I have something to share. But Kevin, I can't even find like a picture of you on LinkedIn. You're like my grandpa. You're like a no profile at all, which is smart for when you're presenting with the Global CFO Council. But I'm going to start with Kevin since we're a little bit light in that area. Kevin, boring, managing director of trade credit and political risk at Brown & Brown. And I think you're living in Denver, Colorado. Is that true?
That is correct. I've been here for about 20 plus years.
Denison University? Did you go there?
Yep. Granville, Ohio.
This may or may not be true. Sometimes I just find out stuff about Kevin Humphrey. Kevin, do you have a yellow lab?
I do.
Damn. And a wife and 2 kids?
Wife and 2 kids, both in college.
All right. Well, congratulations. They're almost off the payroll. You're making some great progress. The future is bright. Jimmy Curcio, how are you doing, sir?
I'm doing well.
Curcio. I think I said Curcio. You're Curcio. Is that correct?
That is correct.
Chief Strategy and Analytics Officer at Arrowhead, a division subsidiary of something, a Brown & Brown company. Is that correct?
Yes.
I think you went to Rutgers,
Sure did.
undergrad math, Rutgers, master's MBA in statistics. Is that correct?
Correct.
And are you an actuary?
I am.
So a little funny inside baseball. So when accountants get together and they say, hey, I'm an accountant, and somebody actually says, oh, are you an actuary? We always say, no, we're not that nerdy. We're just CPAs. So just so you know, that's like the best joke I got. I crush with that at accounting conferences.
When I describe, Robert, what I do as an actuary, usually I get, so you're an accountant. So I say, yes, I'm an accountant.
Yeah. Well, you can aspire to be.
There you go.
I think you're in New York City. Is that correct?
New Jersey.
New Jersey. Same difference. And all right, here's some interesting things that I think I know you. We're gonna start with. I think you met your wife, your wife, and you both went to Rutgers. Is that correct?
Yes, that is correct.
You didn't meet at Rutgers. You met shortly after graduating from Rutgers, and you were fascinated with how big of a sports fan this young lady was. Is that correct?
Yes, that is correct.
And I think you actually, I don't know if you got engaged at Rutgers at a basketball game, but you at least got your engagement pictures on the court.
Did.
Is that correct?
Yeah, many years ago before the beard. That's us.
Did you try to get Rutgers football coach Greg Schiano to officiate your wedding?
We did.
Or was that
failed.
was it? I think you're a little bit of a high school entrepreneur back in the day at South Plainfield. Played some soccer, ran a little website business back in the day. Continued on being an entrepreneur. I think you and your wife maybe ran Max Challenge until maybe COVID killed it.
Yes.
Sorry to bring that up. And then you're lucky. Not only did you get this beautiful woman to marry you, somehow tricked her. I don't know if it was dark when she met you or it was low visibility or she has a vision problem, but congratulations. You're lucky there. I think also you won an RV.
We did.
I never win anything. How did you win an RV?
There was a contest to see if you could name where the video was shot, the commercial. You won everything in it. So it was COVID. It was a Saturday with nothing going on. We guessed where it was. We won the RV.
Goodness gracious. All right. Well, you're lucky all around. That is awesome.
So thank you everybody for having me. And Robert, you are very good at that research. I got a little nervous there. I didn't know how deep you were going to go. I think in a lot of the presentations I've seen on AI, you can go various different ways. Where I tend to approach things is in a very practical perspective. So how can it help me help my business? So there was in my fitness centers we owned pre-COVID or here at Brown & Brown, how can I leverage this technology, these approaches to help our margin, help our growth? So what I want to focus on here is that gap between understanding the technical nuances of AI machine learning and identifying business needs. We've tried to close those gaps, and I do work very closely with our divisional CFO to do that. All right, so next slide. So just quick level set. We'll go over what AI is, what it maybe isn't. Experiential. I like to see things to kind of learn them. So I'll go through some examples of approaches we've taken, models we've developed, and then go over our process for how we do it. I think given the attendees, one of the things we've worked on is revenue forecasting using machine learning. Still early days on it, but I think it's a good venue to share that. And then some things we've stubbed our toe on along the way that hopefully if you are looking to implement, you can learn from. We call these pretty good approaches. We don't have best practices here. We have, hey, things you might want to consider. So I think when we hear AI, at least when I started here, I started around 4 years ago, and it was, I want a robot, right? Give me a robot to help me do things. And what we quickly learned was, well, we don't need a robot. We need to understand what we're trying to accomplish. So we really went into what is AI, what is machine learning, what data science, how do all these things help our business? We've seen them out there, and we knew that if we didn't start to learn more about them, see if there were ways to implement it, we might get behind the curve. And what we quickly found out was we were in the same boat as many of our partners. They kind of knew what was going on, but they weren't using it effectively. So quick level set, kind of how we view it, or how it is viewed. Artificial intelligence, machine learning is a subset of that. So I think what you'll hear is when folks say they're using AI, it's really at its core machine learning. Somewhat newer, right, in the last 10, 15 years. And what it does, machine learning says it uses machines, computers, to analyze data and learn from that data. And why it's become so popular or talked about more is because of the computing power we now have. So what has changed at the bottom there? We have more data, although I might argue at some of our companies, we don't have more data. There's just more data available, externally. So machine learning, in terms of some examples out in the outside world, you'll see these recommender models, Netflix, Yelp, Amazon, Spotify, and the like. If you purchase this, you might also consider this. Netflix is also very good at, you've watched these things. Here's a 90-something% chance you might like this TV show or movie. What it's doing is it's using these techniques, these machine learning techniques, to look at your behavior and what you've liked and make recommendations on things you might want to watch, Amazon, things you might want to buy, Spotify, your Discover Weekly playlist. For me, it comes pretty close. Other examples, chatbots. Now there's chatbots that are rules-based, where if you say something, it's if then respond with that. So you might say the same thing, and it just keeps hitting you with the same response. The more conversational ones are more machine learning, AI driven, where they're trying to understand the intent of what you're asking. Another example is fraudulent credit card purchases. So you might get a notification, for me it's on my cell phone, hey, did you spend this on that? And it's analyzing your spending behavior and trying to find if there's something that disrupts that pattern of buying. There's machine learning models behind that. So as I mentioned, what has changed? Well, more computing power. When I started here 4 years ago, we were doing things locally on our machines, right? Our laptops, our desktops. And we would use these concepts, and it would take 12, 18 hours to train a model. And because we were doing it locally, well, we moved to the cloud a few years ago, and what took a night to do, we can do in a half hour, an hour. So it still takes a little bit, but the computing power has evolved significantly and seemingly evolving every day. Again, I mentioned more data. I'll come back to that because I think when I started, we have similar data here at our company. And then just better algorithms, things like deep learning, neural networks. We don't tend to use those more sophisticated approaches. We find the simpler approaches in machine learning are a little bit easier, a little bit more digestible. And I put a little link, and I'm Robert, I'm not sure if you send the slides around, but if you want to learn more, I found this really good explanation below from MIT that kind of goes through this. So just some examples to illustrate what we've done, intake processing. So some of these will be very insurance specific, but maybe they can relate a bit to your industry. We get submissions in new business. So think of us as an insurance company, make it easier. Well, if we get 100 submissions in a day, which ones should we work on? What if we can only get to 10? How do we know which ones are going to yield the most return? Maybe we call it win them, right? So here, the KPI, and I'll talk about that, was we wanted to increase revenue. So KPI, key performance indicator. So we said, okay, what are the ones we're most likely to win on? And can we find the characteristics of those and build a model, a machine learning based model, to run on every submission that comes in and give us an estimated likelihood we're going to win. Long story short, if you get 100 in, we assign grades A through F of which ones do we think we're going to win, A, to which ones do we think we have no shot, F, and then we can sort of prioritize those. Subrogation. So subrogation, some of you might be familiar with, but when an insurance company pays a loss and the other insurance company should have, let's say it was a car accident, can we recover some of that money? Because we shouldn't have paid it, so how do we go get it? Well, if you're a large insurance company, you might have millions of claims a year. How do you know which ones you should seek recovery on? So we built a model, again, machine learning based model, to go through and identify the characteristics of those claims that we should likely subrogate or try to get money back. So here it was decrease in expense, but really it's a recovery. We've paid money, and then how do we get money? How do we recover that money? And then lastly, this is probably one of the most complex ones we had built, medical records. So we have one of our businesses in Brown & Brown looks at medical records, could be hundreds or sometimes thousands of pages, depending on what's coming through. And we have nurses that read through those records to look for key things, injury date, who was the provider, some kind of notes. So we built a natural language processing model, NLP, to go through and try to, read, putting that in quotes, because it's not reading it like a human, it's trying, but read through the medical records to find key things to expedite that process. So what might have taken a nurse hours to do, we can do in minutes. So it's a decrease in expense, but also it's really about the efficiency. We can get to more than we did previously. Okay, so the approach we take is, let's talk about that gap, right? Identifying the business problem you're trying to solve, and then looking at the technology or the analytics solutions to see how you can help that business need. So I mentioned before the robot, right? Hey, give me a robot, right? I want a robot. Well, what are they going to do? I don't know. Just give me a robot. This flips it and says, put the robot on the shelf for now. What are you trying to solve? So we might look at a kind of a KPI tree and say, we want to increase our revenue. Who doesn't? Well, we build that down to its component pieces to say, all right, to increase our revenue, what's that metric at its core that we need to improve? So we follow a pretty straightforward process to say, identify the goal, what's that KPI, and we'll go through an example here. What are the hypotheses? Now I'm a statistician, so we got to put some kind of complicated term, but what are the things you think can help lift that metric? And then the data. And really the key of all this is that data. So here's an example. Let's say we want to increase our revenue by $500,000. All right, that's the business need. Where, for whatever reason you want to increase $500,000. All right, well, how do we do that? Let's break it down to its component pieces, and we want to increase our win percentage on our business. So for insurance, it's we get a submission in, can we actually, get that customer to bind coverage with us? Because you can choose, other insurance companies. All right, so how do we go from winning 20% of those new accounts to 25%? Well, hypotheses come in. This little flower is my reminder. Let's say we're insuring florists. So we might sit down with our group and say, all right, where are we more likely to win on florists? Well, we do better when they're not a franchise, right? If they're an independently owned flower shop, we tend to win more. Or they've been in business longer than 10 years. or they own their own delivery and they're not outsourcing it to a third party. We tend to win more then. So we write down these hypotheses, and then this is the key. We have to get data because we got to test those. Now, in kind of not classical, but unsupervised machine learning, you basically say, hey, machine, here's the data, find the patterns. I don't love that approach. It's okay, but you might be missing some data that is really predictive that maybe you didn't include. The unsupervised, or you're not giving it the hypotheses, can only look at what's in front of it. Sitting around with the folks that really know the business to say, what do you think drives it? I believe that's the key. So we already have the data. So if you have it, how good is it? So if it's manual entry, someone's misspelling things or putting in 999 as a placeholder, that can skew the data. So you want to look at the data you have. How good is it? Or you need to go get the data. Is it available? You might look at things like geographic or demographic data, and maybe that is available. And then there's that third tranche, which is, man, I wish we would have asked for these data elements, or I wish we would have collected these things. And there's another thing we'll get into a little bit later is, how do you then include that into your workflow? If you need these 3 additional data points, how do you get it? I haven't actually talked about data science, machine learning. So this is probably 80% of the effort in this machine learning AI approach is getting everything ready. The modeling, the deployment is the other 20%. So the tricky part is really 1 through 4 here. So from a revenue forecasting example, we're pretty early days on this, but I thought I'd share it. So like many of you, we budget for the calendar year. And so we're June, what is it today? June 30th. Let's say we had budgeted for the next 6 months. You're doing this late last year. And one of the things we have to do is then forecast how we're doing relative to budget. We look at month end, quarter end, year end. So if we needed to forecast it the rest of the year, there's what we would call naive ways to do it, right? Which are like, hey, percentages, or, hey, I think it's going to be this. And then there's the more data informed ways to do it. So for us on the insurance side, there's renewals, folks so think of your insurance, you've been with whoever for a number of years, you keep renewing, or there's new business. So the renewals, let's just focus on that. How do we predict the revenue from them? I'd say traditionally we say, we think we'll get 80%, or we think we'll get 90%. But what we have as well is customer data. We can look and see at the more detailed level information about our customers. So, okay, how do we use these 2 things together to better forecast? Well, if I can predict if Ginger or Viola, I went to one of these like random name generators, so these are not real. Ramiro, how do we know if they're going to stay with us at the individual level? So let's say we have 50,000 records. How do we know if they're going to stay? Well, we run our process. The goal is we want to predict July through December. How's the revenue going to look for the balance of the year? The KPI we want to look at is to reduce what we're forecasting, what we think is going to happen, versus what's actually going to happen. And really, it's that retention ratio, as we call it. It's who's going to stay with us versus who's been with us. Run the same approach, gather the hypotheses. How many years, maybe we think the longer they've been a customer, the more likely they will to stay a customer. If they're in a certain state, let's say New York tends to renew with us more than Massachusetts. So we get all that data, or we get the hypotheses, we look at our data, same approach. We test, or we gather the data, test the hypotheses, build the model. If it sounds a little repetitive, it is, because the tricky part is really in identifying the business need, knowing that there is a potential solution here, right? AI, ML, traditional predictive analytics, and saying, okay, I think that can help us do what we're trying to accomplish. Then it's the data. The data piece of it is so important. If you don't have that data, that's a non-starter. So the lessons we've learned in doing this, I do want to spend a little time here. Early on in our journey, so again, 4 years ago we started, just to give you a little more background. And we immediately invested in this automated machine learning platform. And we hired a few data scientists and we said, all right, go. And we did not gain traction. It was not cheap. And it was because the tool was just so much more powerful than what we needed. But we also did not identify the business needs and where to use it. We had to get buy-in from folks that it made sense to invest their time, attention, money into deploying these techniques. So rather what we did was said, all right, scrap that. So we non-renew that. We started doing things from the ground up, going in and identifying business problems, seeing if the data existed, analytics approaches. And so now we have a sort of a homegrown, hosted on a cloud infrastructure where we do everything ourselves. So reason I say that is we were approached by vendors, which I'm sure many of you are, and they always lead with, we have an AI, ML solution, blah, 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 right? Well, every single vendor, I'm just going to make this blanket statement, every single vendor or solutions provider is using some form of AI and ML because where they're hosting their solutions, whether it's Amazon Web Services or Microsoft Azure, has these canned functions where they can easily deploy these things. So if they're doing name recognition or image processing, these are all pre-canned functions within these environments. So early on, I'm like, wow, I'm very impressed. This is great. But after you've heard it for the 50th time, a lot of folks are using these solutions. This is the next one's the robot. Give me a robot. Don't find a problem for a solution. So we would see something very cool at a vendor fair, a conference, maybe a talk like this, and say, oh, I got to do that. Right? I got to get a robot. I got to do this. What is the problem you're trying to identify? So if you know that these techniques are available, machine learning, sometimes robotic process automation, which is less about AI, it's more about kind of workflow engineering, then you know that these solutions exist, then what are the problems now I want to try to solve? And is one of these approaches make sense here? Do the unsexy piece first. So the process documentation, current state workflow, building requirements. If you don't have those things in place, so if you say I want to automate my process using AI, ML, robotic process automation, what is your process? So number one, get that down. And is that the process you actually want to run? It might not be. So you call it process or workflow engineering, where you say, well, we do A through M today. It doesn't really need to be A through M because it goes A, B, comes around. Maybe we can streamline it to just be A through F, and then that's where we want to look at automation or infusing some technology or analytics. So getting that workflow documentation, doing the piece that people don't, no buzzwords in it, really makes sense first. We've built plenty of models that don't get used. So what is the plan to implement? Training, understanding how the model is going to work. I mentioned before neural nets or neural networks, deep learning. If I can't explain it to somebody, they might not have confidence in using it. So we always try to go to a simpler approach. But what we've learned in our approach is get people to buy in early that we're going to do something, get them along for the ride, and then deploy. Whereas before we deploy and say, hey, you're going to use this. That didn't work. Measure the performance. So it is sometimes hard to have attributable benefit to some of these approaches, AI and ML approaches. So sometimes it's a swag estimate of how much the model has helped. But if we're going to spend 100K, let's say, on building a model or licensing a solution, then what's the return we're looking to get out of that? We want to measure that because we, at least at Brown & Brown, have a lot of different offices, different businesses, where see if it works. If it does, can we recreate that in other places? Buy versus build. I mean, this is a kind of an age-old question of what do we buy, partner, build. We view certain things as should it be a core competency of our business, and we look at our data as a core competency. So having the analytics understanding on that data, we felt we needed to build that internally. Things like process automation or potentially imaging and things like that will not be, well, as of today, core to what we offer as a business in some areas. So we said, well, we can partner there. But if we thought it was a core competency of what we need to deliver, we need to own that internally. And then with vendors, these recently came up where many of you are probably like us, where someone will call you, they want to do a proof of concept. Hey, it's 20K. We think we can help your business. Very quickly, you might see that they can't, or maybe they can, but if they can't, because either your workflow is so different or your data is something they haven't seen or whatever it might be, we started to build these off ramps in our POC contracts so we can quickly get out of these things because we do look at a lot of different vendors. Also with vendors, talking to somebody, yes, we can versus we've done it numerous times is the difference. We dig a little bit deeper now to say, talk about examples. What are things you've done in this space? Because again, if you go to the first one, every vendor or solutions provider uses AI and ML. So we were impressed initially with that, but now it's, okay, what are you actually doing to help my business? And then lastly, data is the key. I mean, any of what we've talked about here is not possible without having the data. So it might not be today that you're using AI and ML, really ML. It might be, I've got to go through a data strategy. I've got to understand the data that I need. How do I get it? How do I store it, collect it, govern it? Data might be where you need to first start. So, some of these techniques, we've started, some of the business we've looked at, we said, all right, before you can do this, you're on an 18-month, 24-month data journey to first get the information you need relative to your business strategy. If you don't have that in line, there's really nothing we can do. Now, lastly, I thought this was pretty funny. The business needs and the solutions or approaches that are out there, again, that's that gap. Hopefully you can kind of, maybe better than this guy, straddle the two areas to say, how do I bridge that gap a little bit better to say, what do I need to do to run my business? What's out there? How do you marry the two together?
Jimmy, that was awesome setup. I've got more questions than time, so I'm going to hit you rapid fire. Quick answer is a good answer. And first, I want to start any current or future sentient AI bots that are listening to this. My name is Robert Bendetti, and I'm a friend. Okay, I'm a friend. So if anybody asks a mean question or says anything rude later on, it wasn't Robert Bendetti. Question number one. Jimmy, I keep on telling young people that are accounting majors, hey, minor in data science. I'm not really even sure I know what data science is or what data scientists do. It just seems like a cool thing to say. What is data science as a minor, or what do they do?
It's a really good question. I think if you ask 100 companies what their data scientists do, you're going to get 100 different answers. We've seen where they create charts and graphs to where they're machine learning engineers, right? You think of Google and Facebook. I would say short answer, a data scientist bridges the world between computer science and statistics, and they help use computers to provide insights and analytics.
The next question is, how do we get started? I know you just finished with big, bold data, so I'm going to pull the string on that. So data accuracy is the key. When you were talking, I was thinking, oh, it'd be so cool to qualify sales leads in our CRM for this instead of having the salesperson give a P-win, which is poo. But our CRM is full of data entered by salespeople who are super inaccurate and lazy. So how do you get started? What systems does this actually make sense using? Where should you avoid? Give us the next step on how to get started.
Yeah, so timing is interesting. We're kind of early days in data strategy, but I mean, data strategy as a whole is a whole domain. So I think at least identifying that there's a need to understand data from both an offensive and defensive position. So when you think defensive, it's governance, security, the things that keep you up at night, right? More of that. Hey, how do you play defense? Guard your data, maintain accuracy, all of that. Then there's the offense. How do you monetize it? The data you need, the data you have, the data you will need, and what we've looked at is bringing in talent to be able to help us guide us, and we've also partnered with vendors to really create that strategy with us. So we're still pretty new at it, but that's the approach we're taking. Bring in talent, partner with folks that have done this before.
Jimmy, how does or can AI and the blockchain be used together?
It's a good question. I mean, that's a bit outside of my skis in terms of the technology. I would say from an insurance perspective, we have looked at blockchain. There's certain things that lend itself. Proof of coverage is very applicable within blockchain, and what we found is there's a company called the Institutes, which is a nonprofit organization that a lot of us in the insurance industry subscribe to. They've created these forums for us all to research together of how we can leverage these technologies. Blockchain is one of them. So we've been working on proof of coverage and first notice of loss, but how they work together, that'd be outside my skis.
Yeah. I bet there's something there with just the basic principle of dispersed ledger, just that your data maybe is dispersed so it's secure, and then maybe the infinite record of change that blockchain allows, that as the data changes, you'd have an infinite access to what changed, how it changed, and then AI would be able, that the machine learning maybe would be able to tap into that data that no human could possibly be able to look through that level of detail. Another question is some AI tools that you're using or applications. Also, is anybody offering AI as a service, or is there like a minimum buy? Like, is this for big boys? Is this for mid-sized firms? Is this for small firms? Because it sounds like there's an investment.
Yeah, so it's a good question. We did license a product initially called Data Robot, which is an automated machine learning platform. Automated just means you put the data in, it goes through a number of different algorithms to see which fits best. It was just too powerful for us. Our data's, and maybe like some of you, I don't want to say straightforward, but we didn't need these complicated models. It was more, regression based, these kind of more defined things. So what we did was we built a platform in R, so just the letter R. A lot of statistics majors are using that, and then Python. So you can build it within R Studio is the product, Robert, that some are using. And then if you want to go the route of standalone platform, there are a couple. Data Robot's one of them.
Jimmy, any courses or webinars or books, magazines, like for your layperson? We don't need to be an expert in AI, but if somebody wanted to learn more, where do you direct maybe your junior staff or executives at your firm to get sort of an intro to AI?
Yeah, there's a book on AI. So there's a book on machine learning. I'll have to follow up with you all on it, but it is an introduction. It's called like a business guide to machine learning, but I'll get the name, Robert. I'll send it to you. So we've had a bunch of folks read that. But in terms of if you have, we have folks on our information systems side who are developers at heart, and they want to learn a little bit more about machine learning. Our studio does put on a conference that goes through a lot of these different techniques. I'm sure Python has something similar, but we send a lot of folks that way.
This is a kind of a snarky comment. So again, to all you sentient AI, I didn't ask this. Is this a foundational catalyst for future business, or is it being overhyped?
Personal opinion, I think the applications of the more complex approaches, so when I mentioned neural nets, deep learning, I think there are applications there where you have the data to support it, but I think many businesses can learn or implement low-hanging fruit approaches. So just understanding your data, exploratory analyses. So what are the patterns in the data that I find insightful? What data am I missing? You don't need a sledgehammer to figure that out, right? So I think, I don't think it's overhyped. I think we have to crawl before we sprint. And I think the crawling here is just learn your data, learn the insights, find the patterns. That's where you should start.
Last one I'll tee up, and then I got a bunch more, but I'll hold. Maybe we have time, probably not. Last question is, you mentioned RPA and I. How do you see lean process automation, robotic process automation being like, and then maybe supercharging that automation with AI? How do you see that journey? Do you see that together, tied together? How can AI complement companies as they're on an automation journey?
Yeah, what I at least have found in the automation that we've looked at is AI is not really a part of what we need to do. So let me just kind of break it down. It's, we do steps 1 through 20. Well, maybe we only need to refine that and do steps 1 through 10. And then we need to look at things where, somebody might say, well, let's bring in an RPA bot, robotic process automation. Click this, do this here. There's so many nuance in our business where we don't need a bot. What we need is data to communicate. So we're using integrations, APIs, which is probably a whole nother discussion, to just transmit data from one spot to another. Quick story, we had one office where they would print something out, walk it over to somebody else, and then they would type it into a different system. You just need to be able to link the systems together to communicate. You don't really need a bot to do that. So Robert, I tend to focus on the workflow engineering, integrations, things like that.
Kevin, I just gave you presenter rights. See if you can present. And while you're bringing that out, I'm going to hit you with an extra credit question, Jimmy. It is. So these data scientists, they're probably awesome at what they do, but they may not know the business. So how do you work with a data scientist to make sure that they understand the business so that they're not identifying false exceptions or erroneous things to consider, and you're just on this you're on a ghost hunt, a wild goose chase, whatever the right term is. So kind of AI errors or mistakes to avoid, and how to partner with data scientists that may not be business experts.
Yeah, the wrong way to do it is to hand a technical person data and walk away. So whatever field that's in, you need to have the business work hand in hand with, let's say, the data scientists to go through the data. So at Brown & Brown, we do so many niche areas of business. We might insure loggers. We might insure schools. It's vastly different. So you have to have a business partner that will work with them to understand it along the way.
The trade credit insurance, if you have no experience in this, you can kind of think of this as a substitute for a letter of credit for companies that are trading internationally. You can use credit insurance. You can certainly use credit insurance for domestic trade, but it really is something that's used by companies that are trading internationally right now. And this is the side of my business that is using a lot of AI, right? You can just imagine, if you're the insurance company and you're taking the risk side, you want to know how many bankruptcies are likely to occur in South America or in a particular industry or for different size businesses. And this is an area where we are investing quite a bit in artificial intelligence, and just sort of also speeding up the underwriting process. What are the characteristics of companies that are least likely to become insolvent? But let's say at its sort of simplest, credit insurance protects you against losses in your accounts receivable. So most, say, manufacturers, wholesaling companies, they send a container of widgets, they send an invoice, they have the risk that they don't get paid. So at that level, it's pretty simple. It will cover you against, if the buyer becomes insolvent during that period of time, or what we call protracted default. That is, a due date has come and gone. Let's say they're supposed to pay you in 60 days. 60 days come and go, you haven't been paid. There's some mechanisms and some criteria that you have to follow, but essentially you could file a claim for the non-payment just because the due date has come and gone. And then lastly, there's what we call political risk, and this is under a credit insurance policy. So if you're trading into, with a company or counterparty that is in an emerging market, and for some reason they can't pay you, and a couple examples just sort of from my career. In the aughts, when Argentina defaulted, you could be trading with, IBM Buenos Aires, but they can't get money out if there's a financial crisis in the home country. Because the first thing that the central bank or the reserve bank of any country that's going through a financial crisis, the first thing they will do is what we call close the hard currency window. So no dollars, no euro, pounds, or yen, or any of the global hard currencies can get out. I mean, the first thing that those governments want to do is they want to husband their resources and hopefully sort of weather a storm for whether it takes them a month to get out of the crisis or a year. They do not want to let any hard currency out. So even unless you had a parental guarantee, again, from like IBM in New York, they wouldn't have to pay you. So you could file a claim for that political event. We had another claim during the Arab Spring. We had a client that was trading condensed milk, sort of partially evaporated milk, into Egypt. The crates of milk sat on the dock in Alexandria, and all the dock workers, the unions, went to Tahrir Square to sort of protest in common cause with the students that were, campaigning for more human rights there. And you can imagine what happens to condensed milk in cans and in crates sitting on a dock in Alexandria, Egypt. It did not last very long. So that was a case where a client shipped goods. They were basically delivered to the country, but the buyer never received them because of a political event, right? So those three coverages are part of a credit insurance policy. So that's pretty simple. Why would you use credit insurance? And so the simplest reason is what I just described. So risk management, just like a letter of credit. When you ship your goods, you want to know you're going to get paid, right? So losses can hurt companies very badly, and this is just the most, relative to letters of credit anyhow, the most efficient way, most economical way to protect yourself in international trade. Next bullet point down, access liquidity. Typically, what you can do if you're a manufacturer or distribution company, maybe a logistics firm. I know we have a wide range of companies on this call, but if you're financing your working capital with an asset-based lending facility or maybe a factoring facility, there's always going to be invoices that the bankers kick out of your formula. For those of you who don't know, you can take your inventory and your receivables, and a bank will typically give you an advance rate, but they kick ineligible receivables out of that formula. Usually a credit insurance policy will help them get comfortable with the receivables, and then your company gets all the additional working capital. Balance sheet management. So some companies, if you look at their AR, look at their balance sheet, you look at the AR account, it'll say net of allowance for doubtful accounts. Sometimes that's tied to a specific known loss that's coming, but a lot of times it's just simply a formula to protect the company. In other words, you're self-insuring against the potential for loss. And while that's certainly a practice that you can look through history and say, we're reserving too much, we're reserving too little, it is oftentimes inefficient, and it's better to get an insurance policy. The reason is, obviously, as most of you probably know, just reserves are sitting on your balance sheet, sort of dead capital. If you take a credit insurance policy, we can reduce that reserve down to, perhaps wherever the deductible is on the policy. You can use that capital more efficiently through the rest of your enterprise. And then the credit insurance premium is tax deductible typically. It's an expense. So it's just a sort of more efficient use of capital. And then the last sort of point on credit insurance policies is I always sort of evangelize on how they can help you actually grow your top line. So let's say, you're selling into Mexico and you decide, well, I want to get into the rest of Latin America. You go to Brazil. You're going to ask that on that first sale, you're going to ask the buyer for a letter of credit. You're going to ask them for cash in advance, but they're going to turn right around to a South Korean company or German company, anybody that'll allow them some credit in order to make that first purchase. So what I always tell our clients is, give me the names of the say 5 different distributors in Brazil you might want to partner with. We'll go and underwrite them, and we'll come back to you and say, well, these 3 look like they're in very good shape. This one's a dog. This one we have no information on whatsoever. And then your sales force can be unleashed to give credit terms on that very first sale. So you're just sort of using the backing of the insurance policy to use credit strategically to grow your business. Now, next slide, Robert. the overlap between political risk insurance and, between credit insurance and political risk insurance is, if you're trading with a foreign government, that is, you don't have necessarily the bankruptcy risk of that foreign government, but it's what we call sovereign, non-honoring of a sovereign obligation. And it's just a different group of underwriters. You might think of it as the same thing. It's like, you did a project, or you ship goods, you ship medicine to the health department in Guatemala or something, or health ministry, and you didn't get paid. You're thinking about that as a credit risk, but it's a different group of underwriters that underwrite sort of the sovereign non-payment risk. But as you can see here, just from a few different bullet points, and this is not an exhaustive list, but political risk insurance is actually quite a bit more. So any of you who are contemplating or have made investments in any emerging market, basically, you should at least, take a look at all of these potential risks. Now, if you made an acquisition in an emerging market, your banker probably already told you to do this, because that's a lot how this business is driven. Is if you want to make let's say you're a chemicals company and you want to make an acquisition in Peru or something, and then you turn around to your bank here in the U.S. and you say, let me finance this acquisition with a term loan for me. They're going to immediately ask all these questions. So, I'm not going to go through all of the list, but essentially you've got the risk that the host government could confiscate or expropriate your asset. Political violence is just war, or as I mentioned in the example about Egypt, not necessarily war, but it's labor unrest technically. Even though there was no violence, labor unrest is captured within what we call political violence. And then and currency and convertibility, that's like the Argentina example, that you simply could not get hard currency out of the country at the time that you had a due date. They were supposed to send you money and you couldn't get it. And then there's just a panoply of other risks. If you need import licenses or export licenses to operate in that country, or an operating license, and they don't give it to you. Let's say you get it for year one, and there's a new government comes in and they won't renew the operating licenses for, let's say, American firms or Western firms. What we call selective discrimination. If they're only, if they're sort of picking on foreign enterprises in a way that's illegal, these are all sort of an a la carte type of. There's an a la carte type list of coverages to address all of these risks, and the how and why, it gets back to, obviously, if you have assets overseas, you have all sorts of risks. You got the risk that they'll burn down a fire, but you also have these other political risks. And then also, as I alluded, your banker is going to ask you to mitigate any potential, illegal acts by the foreign host government. Sorry, I can't speak anymore. All right, can you advance to slide one?
Yeah, Kevin,
Yeah,
we're at time, so give us a 60-second close, and then I'll hit you with a couple questions.
Well, I'm going to skip through all of this. We're basically coming out of COVID, and that's really affected a lot of emerging markets. A lot of projects just were put on the back burner, but there was a lot of good news coming out of Africa in the previous 5 years that got shut down. Asia, we're still dealing with sort of tariff issues, especially in like certain industries like solar and renewables. But really what's going on here, and I'm sure everyone else, it's top of mind, is the war in Europe and what happens. We know there are claims coming just the year before the war. So in 2020, the political risk insurance carriers wrote about $1.6 billion worth of coverage in Russia. So, and Belarus and Ukraine all combined. So we know that there are claims coming. That is going to make life more expensive, other things being equal, for all sorts of projects around the world, just because the cost of, and inflation as well, and with interest rates going up. So we know rising interest rates, rising prices, other things being equal, leads to losses and defaults. So it's a tough environment, and you, as CFOs, as officers of your companies, you should be concerned, or at least working through what these risks are. And I'll stop right there.
I'm going to give you a couple quick questions. One is, can you insure against AI bot gone bad?
If you would absolutely be covered if it led to a non-payment event of one of your buyers. So if there was a cyber event that prevented one of your approved buyers, one of your insured buyers, from paying you, that's a claim, yes. Typically, if you're worried about yourself, it's cyber insurance.
Any exceptions to countries or industries or service or products currently?
Yes, I mean, it is a revolving cast. Retail is really tough. If you're selling to any retailers apart from Amazon, Walmart, you've noticed that coverage has tightened and premiums have gone up over the last few years. If you're building hotels right before COVID, things are bad. There's always countries, and you can imagine, obviously the OFAC countries are always excluded, but doing deals in Pakistan is difficult. You can sort of, if you ranked the economies of the world and you take the sort of the bottom quintile, is always going to be tough.
Kevin, we are going to close. Jimmy, that was fantastic. Everyone, we are going to send out the slides, the links that were mentioned, and contact information for Jimmy and Kevin. And if you're thinking about, wow, my business broker can't bring the power of this team, well, maybe you need to check out Brown & Brown. They're awesome. They have awesome, I think they're awesome risk management partners and proactive. We use, where I work, Brown & Brown and the family of companies. So great job. Thank you, Jimmy. Thank you, Kevin, for giving us a taste of both that political risk and AI, and appreciate everyone's time. Have a great day. Bye-bye.